Hey, I'm Creed with Homebuyer University. You're doing really well. You suffered through two courses that taught you about the terms under which you hire a broker to help you purchase a home in Colorado. You talked about the form and understood a lot more about the contract that you use to hire a broker and help you buy a home in Colorado. The third course touched on kind of an overview of the Colorado contract to buy and sell real estate. And now I had promised you several shorter videos on several of those paragraphs we needed to go in deeper on. And I don't know if these will be shorter, but I'm going to try. The important thing is you're understanding this stuff. You're seeing this stuff before 10 p.m. when you're trying to write an offer and you're panicked and stressed and under the gun time-wise. And so you're going to go into this so much better off than you would have been without it. So try to hang in there with me. This one today is about protecting your earnest money. And we're going to define what earnest money is. But it's really, you're protecting a lot more than your earnest money. You're protecting your entire home sale here. And you're also protecting yourself. There's a lot of contingencies, a lot of stipulations, a lot of steps, and we're going to touch on all of them that affect protecting your home purchase and making sure you don't regret this after you close and move in. And we're also going to make sure we protect your earnest money. And we'll just get started with that. So getting started here, as always, I suggest that you go ahead and glance at the top of any contract that your broker sends you. That could be on paper. More than likely it's going to be electronically or through a web portal nowadays. Make sure it's approved by the Colorado Real Estate Commission. If it is not, ask that broker to explain to you who's prepared this document and what the differences are between what they're giving you and what the Colorado Real Estate Commission has approved. And you'll certainly see this anytime you consider buying a new home. You might see something if you consider buying a home from a for sale by owner, but there's other times it might happen. So just glance at that. You'll have a better idea of what you're getting into. And as always, everything here is not legal, tax, or accounting advice. Just hopefully some good advice from a real estate broker that's been around for a really long time. That's all. This is just good knowledge for you. Every contract, every home buyer, every seller, every house is different. So this is good general knowledge. Okay. We're going to start back off here at the contract to buy and sell real estate. That's for Colorado. This might be good for information for other states, but I can't guarantee that at all. Let's just start by scrolling down. You've seen this contract before, so we're going to look at specifically the items you want to use and consider and deal with as you go through this process. It's going to protect your earnest money, and it's really going to protect far more than that. It's going to protect you, not only during these negotiations and purchase, it's going to protect you for years after you've closed on the home. So this is pretty important stuff. I'll try to make it quick, but I can't promise quick. I'm sorry. I'd rather have thorough than quick. We're going to scroll down, and if you remember from the course on the contract, this actual contract, the overview course, the prior one, we talked about this deadline chart, if you will. It's kind of like an Excel spreadsheet or an accounting chart. And everything that you see that's highlighted is at least one way to protect your earnest money, and is particularly important for protecting you during this process, this home purchase process, and for years after. Dates, deadlines, and applicability. And we'll go through all of these individual. We're not going to just do an overview on this. This is a little bit deeper. Don't try to memorize what page things are on. Don't worry about what paragraph they are. Over time, almost every year or every other year, you're going to see Colorado real estate contracts change, sometimes just a little, sometimes a lot. And things come in, usually get added in. This current contract's 19 pages, fairly small print. When I started in real estate in Colorado, I can't swear to it, but it was either 2 or 3 pages long. So things get added in. Things disappear, lots of stuff gets added, and the pages and paragraphs all change often. So learn the topics. Don't memorize the contract, because it'll be different if you buy a home a year from now, very likely. Every one of these that are highlighted is a contingency. What does that mean? A contingency is something that's built into the contract that you have to deal with, you and the seller and your brokers and title companies and lenders and everybody else. They have to deal with these things, and they either approve them, disapprove them, or terminate the contract based on them. And let me give you just a really good example, and then this is for everything. It typically works. Let's go ahead and look at the inspection, because that's something that's very easy to understand. You go under contract and you decide that you want to take a look at this house much closer than when you walk through before you made the offer, right? Typically, you're going to hire a third-party inspector, and we had a little bit about that on the prior course, so make sure you consider that. So what's going on here with the inspection? Let's use this as our overview for a lot of these processes. Sometime before what's called the inspection objection deadline, you're going to get an inspector in there. They're going to take a look through all the general areas of the home. And keep in mind that your inspector is very typically a generalist, not an expert on one particular thing. They're going to check a lot of stuff, but if there's an issue with the foundation, plumbing, electrical, heating, roof, and other items that they are not trained in, and specialize in, they're going to recommend that you get a specialist in there. Keep in mind, it's sometimes hard to get a specialist in very quickly. So if you have any concerns ahead of time, you might want to jump right to that. Just something to think about. So an inspection objection deadline, you'll set that, and let's say you set that out 7 or 10 days after contract. Okay, so if the date of the contract is 1/1, January 1st, maybe January 8th or January 11th, something like that might be your inspection objection deadline. That is the date by which you want to make sure you've had your inspection, you've had a chance to review your inspection for any concerns, and you've had time to bring in a specialist if there is a concern. So be really careful with that. That's the date by which you would have to file a form to the homeowner if you have concerns and you object to something. And then you try to negotiate out who's going to do what and who's going to pay for what. So it gets a little bit more complicated. We're not going to go that deep, but I just want to make you aware. If you guys are able to come to a resolution of those terms, who's paying for what and what repairs are going to be done, by this inspection resolution deadline, you've reached something that both of you will accept, you're good. If you are not able to do that, then the contract is going to go ahead and fail based on that date, at whatever date and time you've put in the contract. So if you gave yourself 3 days to do a resolution, at the end of 3 days, either you've got a signed document that says, here's how we're going to do it, who's paying for it, and everybody's happy, or this thing might drop dead. Okay, and you can always extend out, let me caution you, you can always attempt to extend out dates if it takes longer and if both you and the seller are motivated, but it gets complicated. And that's how this whole thing works, and that's how you protect your earnest money and yourself. You meet every deadline, every one of these deadlines, by the date, and I've got notes in here, but you would normally have dates in here, specific days, times, dates. And as long as you accomplish what's in here by this date and you move over to the next step by that date and you get this done by that date, you are protecting your earnest money and you are protecting you when you purchase this home, and you'll be much happier. And we're going to just go ahead and roll through some of these. And every one of these, as you learned last time, is related to a paragraph or series of paragraphs. There's a lot of sub-paragraphs in this contract. So this inspection was part of paragraph 10. And we're now going to go through some of these very specific paragraphs so you understand how you can protect yourself. Let's first give a little bit more detail on those drop-dead deadlines, because you're living and dying and protecting both you and your money through those deadlines. What is a deadline? If any deadline falls on a Saturday or Sunday or federal or Colorado holiday, what do you want to do? If you've put January 1st for something, and that is a holiday, New Year's Day, do you want that to be a drop-dead date for sure? Or do you want to extend that to the next day that's not a holiday or Saturday or Sunday? Just something to clarify ahead of time. Ideally, you're going to be staring at this contract, your broker should, and try to make sure you're not landing it on any weekends or holidays, but sometimes things happen. Okay, so let's make sure of that. You learned last time in the contract course that the earnest money is something you put up to demonstrate that you're very serious about that. You're going to negotiate this thing in good faith. You're going to give some money up front. And where does that money go? Earnest money. Earnest money is set forth in the section in the form of. It could be maybe a personal check. More than likely it would be a bank or cashier's type check. Okay. It's going to be held in a trust account. And what is that? That is a special bank account that either the listing brokerage, not the person, the brokerage, the company, and or the title company would have, and there may be another third party that somebody gets involved. It could be an attorney or anything else. Okay. It's a special account that's used for only one purpose, and that is to set aside funds for a future purpose, in this case to purchase a home. And it's safe, and it's I won't say guaranteed, but nobody's going to touch that money until it's time to close. Okay. And that's all it is. And then you get that credited back to you, where it says earnest money. If you gave a $5,000 earnest money, it would be credited back to you at closing to help cover your closing costs. So that's all it is. Now, there's some information in the contract here that talks about, well, what happens if this contract doesn't work out? If it works out, you see it again when you close, and you get to spend that toward your closing costs. If this thing crashes, this contract, at any point for any of these terms here, and we're going to explore those in greater detail later on in the contract, there's some things here to make sure that your money is as safe as possible. If you meet all the contingencies and do everything that you're supposed to do when you're supposed to do them, give notices and do your negotiations when they're supposed to happen. I'm not an attorney, so I can't give you legal advice, and I can't absolutely guarantee you there'll never be a problem, but that is the best way to protect your earnest money and the best way to protect yourself in this whole contract. There's some stipulations on what happens if you guys get into a small world war between you and the seller. But if you do everything that you're supposed to do when you're supposed to do it, that is how you're protecting yourself. Okay? And this is going to go into some more of those details. Let's not hit on that right now. Let's make sure you do the stuff you should do, and that's the best way to handle this. You're going to get some loans, probably. It could be conventional FHA and VA. The reason we're going to look that up is that it affects one of the contingencies that's at the very top of this, some of those highlighted items. And right here's where that starts. And it talks about new loan terms. And essentially, and this is very cool if you think about it, you get to decide unilaterally, all by yourself. Let's look at the exact term here. If buyer is to pay all or part of the purchase price with a new loan, this contract is conditional upon buyer determining in buyer's sole subjective discretion whether the proposed new loan payments, interest rate, conditions, and costs, and any other terms are satisfactory to you. Okay? Great protection. And I've got some stories of the old days where that was not so much so. This condition is for the sole benefit of buyer. And you're going to see this where you get the sole discretion to decide to go forward or not go forward. And as long as you make that decision by a particular date and respond back to the seller with a particular form by a particular date, you're protecting yourself. And you're going to see this over and over and over. And that's why you've got to live and die by those dates and times, okay? If you don't like it, you let them know. And you can either get out of the deal, okay, with some particular forms, or you can decide whether you want to live with those terms, is what it really comes down to. New loan availability. If you were promised something 61 days ago, and now it's time to go and buy this house, and the market has changed and interest rates have changed and maybe underwriting standards, if you can't get the available loan that you want, you can also get out of this thing and protect yourself. Now, make sure you're doing that based on the times and the correct forms within this contract. Again, you live and die by that time frame grid. So hang in there and watch all that stuff and get yourself a bullwhip and keep your broker awake at night. Not at night, maybe. Keep his tension up during the day. His or her. Let's keep going. You've got appraisals. Now, an appraisal is a third party that has a special license that's there to protect, remember from the last class? Not you. They're there to protect your lender if you're getting a loan. If you're paying cash, they help protect you. It still helps you. But if for any reason the appraisal does not come in at the value that you're paying, and you're building that into your contract to make sure it's built into the contract, you have the option of dissolving the contract, terminating the contract, or following through on the contract. And if the appraisal's low, you'll be bringing more money to closing. If the appraisal's high, well, great. It doesn't really harm you or anything else, and so you'll probably go straight forward. Okay. And again, there's all these different terms in here. And let's touch on this a little bit because you have this option in several parts of the contract. Notice to terminate is usually kind of a separate entity versus the objection and resolution. To terminate means, okay, and we'll just use these figures. You're under contract, you're buying a home for $500,000. The appraisal comes back at $490,000. Now your lender is going to find that out, and they're going to say, okay, well, we're not going to give you the additional $10,000 you need to cover that. We're only going to loan up to whatever your terms were for the $490,000 sell price. So you could either make up the difference in cash, or you could just file a notice to terminate through your broker to the seller, and it's a done deal. Okay. Now the seller may be willing to negotiate the price down also, so keep that in mind. Don't just think you have to kill it. But if you want to go that route, you would do an appraisal objection, and that means, hey, listen, this didn't work out the way I thought it was going to work. Let's try this. Are you willing? And if you guys can come up with a resolution that you're both happy with, then you get that in writing and you just keep moving. Now, again, there's specific dates for every one of these. Terminate, objection, resolution. Every one of them. And a lot of times, if you can't reach the resolution, this contract, this whole deal, is going to terminate or expire automatically at the date and time this expires. But make sure you read that, because this can be a little bit tricky. Sometimes you have to file some forms. Sometimes things automatically expire. Don't assume that for every contingency, okay? That's why this stuff's all in writing, and that's why this is now 19 pages. And up here are all these, or at least some of the additional addendums or notifications various contract attachments that helps control this. So it's more than 19 pages, I promise you. And wait till you see your loan papers. They dwarf this. And then again, what it does is it's discussing. Remember I told you a little bit earlier, depends on the kind of loan you get. There's different contingencies and different information and different things that occur automatically based on whether it's a conventional, which is any kind of private loan mostly, other than seller financing, Federal Housing Administration, or the Veterans Administration. Those are all a little bit different. So based on whichever loan you're getting, if you're getting a loan, you need to know that. Homeowners Association, we touched on that the last class. There are so many rules and regulations. Decide if you can live with them, with those regulations, and make sure that the HOA's got some money. Otherwise, a year from now, they might be going, hey, we're broke. We need to assess everybody $5,000 because we want a new swimming pool. You get a chance to review all that stuff. And if you don't have these documents by a specific date, you need to act a certain way, and that's built into the contract. This is all conditional on the buyer's review, and you can do certain things by the termination deadline. And there's really, on this one, the home seller really can't control the HOA and what they do or don't do. Now, if there's a current special assessment, they can certainly pay that. But if there's stuff in that homeowners association that you hate, it says that, I don't know, you can't have kids or something. It's important that you know that, and you need to terminate. There's really not much to negotiate on that, unless, again, there's something that could be paid by the seller ahead of time. So there's less of that negotiation stuff, but there are still specific dates and documents that need to be dealt with if you need to get out of the contract and protect yourself and your earnest money on it. Title documents, the same thing. What is a title document? This is essentially telling you anything and everything that's recorded with that home. Easements and rules and regs and setbacks, and a lot of times there's a survey, a plat drawing in there. Everything. You want to get all that stuff, and you get to review it. Guess what? If you have an objection, you can make an objection, and you try to get that cleaned up between you and the seller, and maybe the title company at that point. You may even need to bring in an attorney. If you can get it cleaned up by what date? Resolution deadline. Then everything's good as long as you have everybody happy in writing. If not, then there are specific time frames when you may need to terminate. Okay, and there's special forms for that. Off-record title. What that means is if the seller knows of something that would affect that title, in other words, if it had been recorded, it would be on your title work, but it was never recorded. So let's say that the seller's brother-in-law lives next door and needs to access the vacant lot on the other side of him, and he gave him written permission to, or even maybe verbal permission. We would need to see what comes of that, to drive across his backyard and park a semi over there or something. They have to tell you if there's something there, and you get the chance to do what? Object, or if need be, terminate the contract based on that. Okay. And I'm not going into super detail. I just want to make this fully aware. There's a lot of contingencies and a lot of dates and a lot of deadlines. Just watch them. That's how you protect yourself. Tax certificate, and again, this is going to tell you how much the county's hitting you up for property taxes each year, what the current assessment is, and they should convert that over to you to what the real tax amount is, not only in the past, but the current assessment, whatever the forthcoming taxes might be in the future years. And that can change. Different counties do different things. I think often they reassess about every 2 to 3 years. Some might do it more often. As they get more computerized, they can catch up a little bit more quicker than they used to. Okay. That tax certificate is going to be on there and tell you how much you'll be paying for taxes, at least a good estimate. Guess what? If you have a problem, you're going to file an objection. If things get really bad and you can't work out what's going on, you need to go ahead and terminate the contract. Now, that's also going to include, by the way, these special taxing districts. I think it's a little further down here. Oh, there it is. Sorry. Special taxing districts. What is that? We touched on this in the last course, but back in the old days, the cities would essentially cover the cost of infrastructure for a subdivision. So a developer wants to come in and they want to build, and they need water, sewer, electric, roads, and all kinds of stuff like that, right? Some of the cities in more recent decades discovered that that was very costly. They didn't want to cover all that infrastructure cost. Third-party private companies picked up the difference. But if you're in a special taxing district, one, it could mean you're paying additional taxes to an entity beyond the county taxes. And two, you want to get a hold of those terms and take a look at them. You know, they could have a specific date where everything comes completely due. In other words, if there was a $20,000 per house assessment to do all that stuff through this private party, and you know they're charging you, let's say, $100 a month to slowly pay that down. Well, they might have a due on sale clause or something that accelerates that, and they might just want to send you a bill for 10 grand at the end of things. You want to see that stuff, and guess what? You have the right to investigate it, the right to object or terminate on that kind of stuff, as long as you do it within the time frames you've agreed to in the contract, okay? You getting tired of hearing that? I just want to get that so burned into your head. I'm sorry. But it's vital. It's how you protect yourself. And you'll have this title objection and resolution stuff. What would be a resolution? You're like, well, the seller can't control what the county charges. So the title work, again, could be that easement where the brother-in-law gets to drive the semi across your backyard. They can dissolve that. There's no reason they can't have that negated within the agreement. So you can resolve certain things. Title objection, right to terminate, and there's a lot of information in here. We won't do that to you. I won't go into all that. But it's really good that you're aware of it right now before you're trying to make an offer. New ILC, new survey. And I think I used the wrong term in the last course. I get talking. And for those of you who have asked, no, I don't have any notes in front of me or around me. And so I am just giving you what I know. And sometimes I just start thinking ahead a few steps and misspeak a certain term. I'm not giving you bad information, but sometimes I say something that's not 100% what I wanted it to be. New ILC, Improvement Location Certificate, or a new survey. Now, when would that happen? If you're buying in a developed subdivision, it probably won't. You can always want one and request one and get one. You might have to pay for it. And a nice ILC may not be too much, a few $100s. Full-blown survey, depending on the size of the lot and the complications, it could be $1,500 to $15,000. ILC, what that means is somebody is going to go out with a copy of the recorded plat and your lot and everything, and they're going to visually inspect and check to see if anybody is encroaching on your lot line, or if you or your prior owner accidentally put a fence over somebody else's lot line, or if that brand new tough shed, that's the one, that new 3,000 square foot tough shed that they built themselves, infringed on somebody else's lot. And they're going to glance, see if the setback looks correctly. Was the house really planted? with a 10 or 15 foot, 20-foot setback, whatever it might be, from property lines or roads. And they'll confirm or deny easements for utilities such as water, electric, that sort of thing. And that's what an ILC is. They're just double checking. Why would that ever happen? If you want one, if your lender wants one, because lender likes to look out for themselves, or because if the title company is giving you a document, an actual insurance policy promising to protect you against any problems with this property that relates to anything to do with title, they might want one. Okay. Survey, a full-blown survey, it doesn't happen all that often. You can always order one. If you want, folks out there with the poles and the GPS, geographic location systems, and know exactly, pinpoint where the spikes should be, the surveyor's points on your lot. Certainly if you're buying 208 acres and it was 208 acres plus or minus in the MLS and on the signs, you may well want that surveyors out there and confirm that. And that's really about the only time that would happen. And guess what? Notice to object, notice to terminate, all that stuff is built in here. See how you can protect yourself? Follow the instructions on your contract. You created the contract based on what you wanted. And these are the steps you're going to follow to protect yourself and your earnest money. Seller's property disclosure. This is a long document where the seller is disclosing what they know about the property. And there are dozens and hundreds of questions on there. And they're going to check off no, don't know, and give you additional details. Look through that very closely. Don't completely rely on it. Always get your inspection, and always get your specialized inspections if there's something you're worried about, like a foundation or a furnace or a roof, okay, electrical, plumbing, anything that's more major than that. You always have the ability to object. You can do a termination. And you're hoping to get this whole thing to work out, but you're also trying to protect yourself. You don't want to close and have a $25,000 bill for a new boiler and plumbing system, okay? Insurability. Oh, we touched on this a little bit last time. A big one to protect yourself. Most areas you're going to be able to get insurance in. Homeowner's insurance, that's the stuff if something happens to your house, fire, flood, that sort of thing. Hailstorm. We never have hailstorms in Colorado, do we? Because of all the hailstorms, because of all the fires, we don't see too many floods, although up north, Boulder area and stuff, they certainly had some a few years ago. Make sure that your home can be covered, and make sure you're happy with the terms and the cost of that coverage. Cost of insurance has gone up so much on my house, I can't even believe it. I'm up in the foothills conifer area, and several years ago, when we had a few years with a lot of forest fires, a lot of the companies backed out, including the one we had. And the ones that were willing to stick it out or come in, they wanted like triple. So check that. And guess what? You can object, or actually on this one, I think it's just terminate, because there's not much the seller could do. You can't really tell the seller, hey, find a insurance company. That's you either accept it or reject it at that point. Due diligence. What was that? Up here in the contract, if there was anything specific you wanted to investigate, things like, hey, there's a really shiny, nice finished basement here. County records has nothing showing for finished square foot below grade. Due diligence, you want to see if there were permits pulled and who did the work and receipts. And there's any number of things you could put in due diligence. Guess what? You have the right to object or the right to terminate, the right to try to negotiate how this is going to be handled, and so on and so forth. Protecting you, protecting your earnest money. Conditional upon sale of property. What that means is if you're not going from being a renter to a purchaser, if you're currently a home seller, also then purchasing, and you've built this contract so it's contingent upon the close of your sale usually. Not too many sellers are very excited if you give them an offer that just says, hey, we're on the market, we're hoping. They usually get a little more excited when you have a contract that says your home is under contract. And then you're going through all these steps, 2 deals, and you're seeing one from the buyer side and one from the seller side. Okay, it's a lot of work, so you really need to watch those dates then. Lead-based paint, okay, you got a couple things there. You're going to get a disclosure from the seller and the listing agent, and there's going to be a brochure that says, and it's from the EPA, Environmental Protection Association Administration. I always want to get those terms wrong. That says what lead-based paint is, what it can do, and some suggestions on how it could be remediated or controlled. If the home was built, theoretically, if you look at the different dates, it says here if it was permitted or built prior to January 1st, 1978, that's right here in your contract. Now keep in mind, if it was permitted, builders, think back to 1978 as a new home subdivision, okay? If it was built in 78, okay, it may or may not have. But if it was permitted in January 1st or before that, 78, sometimes builders take a year or 2 to actually get the construction finished. So it would not be unreasonable to at least have this and sign off what you want to do on anything up to maybe, the end of 1980. It sounds a little strange. It's not required, but it's something you might want to think about. And essentially you have, and we're going to pull up some of these individual forms, but you have 2 choices. First, the seller's going to tell you if they know anything or have ever tested, and then you'll have a choice. Do you want to get a test, or do you want to waive getting that test? And that's it. If you do get the test, guess what? You can do, an objection, try to negotiate the seller to do certain things, or you can terminate based on that. And we're going to go into a few of these specific ones. Methamphetamine, I'll be honest with you, I don't know a lot about drugs. You can't tell that from looking at me. I had a home, and I was actually the listing broker. And it's a pretty big, fancy, nice house somewhere off Colorado Boulevard, kind of the ritzy area. And I would have never suspected it. And some buyers came directly to me and wanted to make the offer. And of course, I did all that for them. What does that mean? I was acting as a transaction broker, right? And they did an inspection. And so we're going through the house inspection. And, these things can go hour, 2 hours, 2.5 hours, 3 hours, depending on the size of the house. And so, it takes some time. And there's a knock on the front door, and, they're busy watching the inspector, so I ran over and grabbed it. And they had ordered up one of these methamphetamine tests. I'm not kidding you, right? So I'm there just in dress clothes and dress shoes. And, this guy is in a full Tyvek, I think that's the right term, Tyvek, the full plastic, Ebola kind of, Ebola suit with the mask, and gloves and booties and taped up. And I'm like, oh man, what is going on? And he just ran from room to room. And to me, it looked like just test tubes and Q-tips. And each room he would do a swab and come back and eventually left. But it makes you paranoid when you're in there just in your normal clothes. And sure enough, it came back, and they said it was low enough that it was probably not manufactured there, but it had been used there. Killed the deal, no problem. That's fine. They terminated. And then the seller now has to fully disclose or remediate that. And eventually a investor picked up the property. So anyway, sorry about the long story. But that's the sort of stuff that happens with pretty much all this stuff. You have a plan. You do the plan, you either object or terminate or negotiate, and you get it all worked out, or you protect yourself, and sometimes you have to walk away, and that happens. That just happens. And let's see what else we have buried in here. And it's not like I'm skipping stuff. That it is important, but it's not related to the topic at hand, which is these contingencies and these various steps and these various documents to protect you and your earnest money. Walkthrough, you can certainly, the day typically of closing, you get another chance to walk through the property to make sure it's in at least as good a condition as it was on the day you made your offer. Now, if there's been additional repairs done per negotiations in the contract, you'll see those, but it's important. I had one, okay, I'm so sorry I got to give you these stories, but I just want you to be aware. We were selling a condominium somewhere in Denver, Thornton, something like that. And, it was a vacant property, and closing was Christmas Eve. Yeah, Christmas Eve. And the buyer's agent, I was the seller's agent, the buyer's agent had taken a 3-week trip vacation to Europe. And this was a single girl, and we closed and everything got handled. And then she went to take a look at the condo. They hadn't done a walkthrough. They hadn't even been in the unit in weeks. He's been gone. And sure enough, the unit above had blown a pipe and flooded this unit. And I didn't know. And it was unoccupied. And the amount of scrambling I had to do to get people out there Christmas Eve to help deal with this stuff. And we got everything fixed and everything worked out. But do your walkthrough, please. You have the right to do that, and you have the right to terminate if that property's not in the same shape it was when you went under contract, or better if there were repairs done. Sorry about the side stories, but it's important stuff. And it talks about things like that. What happens if there is damage, okay? Condemnation, not too often. There's not too many that, government entities come in and take over the property. But if it does happen, obviously you're going to go away. And it's always funny at the end of this, they, again, recommend that you get legal and tax counsel. I always do also, and you're welcome to do that. It would be at your expense, but you have to decide what's worse, spending a few bucks up front or getting harmed for decades as you own the property, okay? And it just mentions, right, we have all these dates, these time frames, these contingencies, these steps, these various addendums and contracts and notices that get pushed in here. Keep in mind, time is of the essence. Actually, it says that over here. And you're going in this with good faith. You really want to try to buy this home. You're going to protect the crap out of yourself all the way through. But you're doing this, as part of trying to really purchase a home. You're not there to torture a seller. They're not there to torture you, okay? You're just going to protect yourselves is what it comes down to. Earnest money dispute, again, it talks about if there is one. Now, if you've done all these steps when you're supposed to do them and everything was filed in writing when you were supposed to and so on and so forth, there really shouldn't be an earnest money dispute. If you get to one of these major contingencies that we've just talked about, you have the right to object. You have the right to terminate based on most of these things that we just talked about. Some don't have that right of objection because the seller can't fix HOAs and stuff like that. And this just covers and reiterates that you have that right and that protection. As always, this is the entire agreement. Anything discussed outside of this agreement that's not in writing in this agreement doesn't exist in the eyes of the legal community. So be careful there. Talks about how all these documents can go back and forth. And physical delivery is paper handed to somebody. Electronic notice, electronic delivery. email portals. A lot of the folks use the websites now, so you can sign online and everybody can see it pretty much simultaneously. It's a lot better than the paper contracts, I promise. And that's it. That's really it. Again, you're negotiating in good faith and you sign off on this. And then, as long as the buyers and the sellers have all signed this, you're going to live by this stuff for at least the next 4 to 6 weeks, maybe a little bit longer depending on the situation. But that is how you protect yourself. And let me cover one last little baby thing that I kind of brushed over. Alternative earnest money deadline. It reminded me when we talked about paper documents. Back in the days when we had to run all the way across town at 11 o'clock at night and stuff a paper contract into an office door slot for somebody to eventually find it, we would attach often the personal check of the buyer for earnest money at that time. Since most stuff is delivered electronically now, we have this alternative earnest money deadline. And the way we often work this out now is we get that within 1, 2, maybe 3 business days. Don't make the seller too nervous. After we send the electronic documents, if that makes sense. But just keep this in mind. That's what this was all about. This is how you protect your earnest money. This is how you protect you, which is really more valuable than that earnest money, and protect your home ownership for years, maybe decades. Set these up and live by these. Meet every one of these deadlines, and you're fully protected. Now, it's not legal advice. We already know that. But this is the best you can do to fully protect yourself. Thanks for sticking in there again for a long video.